And if I look at the global money supply year on year against the year-on-year rate of change of Bitcoin, you can see it's a dominant driving factor of the overall direction. It is not the only factor, but a dominant driving factor. Now, global money supply has been shrinking because everybody's been tightening. So that has reduced the price of Bitcoin. So that was the crypto winter was essentially in that chart. The following chart shows that the money supply is cyclical too, and the ISM leads it by 9 months. And the ISM inverted suggests that the M2 rate of change is going to start rising again.
Macro investor Raoul Pal is naming the 3 conditions that could give the crypto markets a healthy boost after enduring months of rocky price action. A former hedge fund manager who retired at 36, Raoul Pal is a co-founder of Real Vision, a financial media company offering in-depth video interviews and research publications from the world's best investors. He has run a successful global macro hedge fund, co-managed Goldman Sachs hedge fund sales business in equities and equity derivatives in Europe, and helped design the BBC TV program $1 Million Traders, training participants in investment and risk management strategy. Raoul retired from managing client money and now lives in the Cayman Islands, from where he manages Real Vision and writes for the Global Macro Investor, a highly regarded original research service for hedge funds, family offices, sovereign wealth funds, and other elite investors. In a new interview on the Real Vision YouTube channel, the former Goldman Sachs executive says that the Fed's tight monetary policies are already priced into the crypto markets. Last month, the Federal Reserve raised interest rates by 75 basis points. Pal says that the lowering of commodity prices, reduction in yields, and the topping out of the US dollar could absolutely benefit risk-on assets, including crypto. I think the low is close. Whether it's in or not, I can't tell. But I know from all of my economic work, and I've probably got maybe 200 charts to back up all of the stuff I showed, that suggests the balance of probabilities are that a lot of this has been priced, that the inflation problem is probably a thing of the past, and that economic growth is going to fall sharply. Before we listen to Raoul Pal, please don't forget to like the video and consider subscribing if you are yet to do so. Thanks for watching our videos.
So that basically tells us things like Bitcoin and risk assets, which ties into the NASDAQ being cheap and the exponential aid stocks being relatively cheap. There is a potential big turning point in markets to come. What I'm waiting for is that turn in bond yields. I think yields are forming a head and shoulders top with 265 in the 10 years, 275 in the 10 years as the neckline. If it breaks that, then we're going back below 2%. Inflation break-evens are already falling, so we've seen them fall sharply. And I'm expecting the oil market to show more liquidation. We saw a bit glimpse of that this week where we had some really rough days in oil. And I know there's a lot of oil bulls out there, and I understand the longer term picture. And Dwight Anderson made this clear in his interview is the thing that will pause the longer term picture is a demand destruction. And Warren talks about it as well. I think we are going to see more demand destruction in a shorter, sharper period of time. Then maybe oil steadies again back at $80 to $100 range, but the rate of change won't be as high. It won't keep going up at 100% increments, which means inflation is not as high. So the inflation we get out of this after this recession is going to be much less than people are expecting. People are over extrapolating past prices and rate of change than current prices. So that's basically my macro view, is maybe a bit more pain to take, really unclear. One gush lower, but the thing that will happen is that we need to brace ourselves for the economic impact. It's going to start to become clear to people, clearer than it is. People don't yet believe that story, but I think it's going to become very clear.
What's the healing process like? Are we going to, because there are these charts and you've showed them. I just had a conversation with someone today where you have these bear markets and then it rallies. Is there something else that happened here now because of the breadth of participants, or, you know, where the digital asset market is, that's going to make this rebound look different? Or would you expect to see prices resume their climb in the way they have traditionally?
I don't know yet whether we've seen the low. I think so, and I've been averaging it in aggressively, actually. The kind of biggest addition to my crypto bets since 2020 into this, but I don't know where the low is. Could a drop in economic conditions cause further short selling or panic? Possibly. You know, I think the low is close. Whether it's in or not, I can't tell. But I know from all of my economic work, and I've probably got maybe 200 charts to back up all of the stuff I showed, that suggest the balance of probabilities are that a lot of this has been priced, that we've got the inflation problem is probably a thing of the past, and that economic growth is going to fall sharply.
There is a reliable way to trade Bitcoin with up to 100 times leverage. Margex has a simple registration process that takes less than 30 seconds, and you don't have to submit to a KYC process. Just enter your email and preferred password, click register, and you are all set to start trading. With its multiple layers of protection for your personal details and assets, Margex is easily one of the safest cryptocurrency exchanges on the market. In addition to the standard security protocol, Margex features the MP Shield system, a real-time machine learning-based system that helps prevent price manipulation and fraud. The platform also features the friendliest user interface, especially on the trading terminal where all the magic takes place. On the left side of the trading terminal, you can see the order submission menu. Here you can set a limit on a trade, automatically execute instant buy or sell orders, or set a trigger price for your orders to avoid losses. You can also input the order size and choose preferred leverage of up to 100x and a minimum of 5x. Margex also features cross margins so users can avoid liquidations across all relevant open leveraged positions. You can easily switch between cross and isolated margin by clicking these icons. Lastly, on the trading terminal, you can see the trading fees, 0.25% for longs and 0.05% for shorts. Margex has no hidden commissions and competitively reasonable fees. Between now and July 31, the platform is also offering a 15% bonus when you deposit $300 or more. To get this bonus, click on Wallet at the top of the home page and click on Use Promo Code. Enter the promo code SAVVY15, confirm, and you will immediately get 15% of the eligible deposit. Click on the link in the description to get started and enjoy all the wonderful benefits.
Now, what happens when economic growth falls sharply is we now have this Pavlovian instinct of the market looking forwards and saying the Fed are going to pause and monetary conditions are going to ease. Now, don't forget that financial conditions index that I showed you, the global macro investor one. Well, that prices in commodity prices and the dollar and yields. So if yields start coming lower, commodities start coming lower, and the dollar eventually tops out, which it's not clear that that's going to happen yet, but at some point it will, then you've got all of those reversing. And that tells you that usually that's when the Fed have started reversing course as well.
And you think that will benefit, those conditions will benefit crypto as well as other risk assets?
Absolutely. Now, there is another scenario that is very real. And the scenario is that I'm wrong, that the 1974 short, sharp contraction of the economy and contraction of markets is not that it's 2001-2 or 2008 all over again. In which case, you get a false rally that goes on for a period of time, and then it rolls over and has another whole set of lows. Those are the 50% sell-off style scenarios. I don't see that in the forward-looking data because I think it looks sharper and shorter than people expect, but that is a possibility. So it's really hard to call in these things, trying to pick lows and stuff is not easy because, many people got carried out in 2002. I remember it really well. Then 9/11 hit and then the whole thing rolled over again and it destroyed people. So, these kind of markets are not easy to trade. The bond market tends to be the easier trade, but it's been hard because of the inflation story has been so sticky. But when it gets easier, that's an easier place to make money.
Angela asking if you had new money to deploy for investing today, where would you put it? You mentioned a couple of the things you're looking at, but what do you feel most convicted about?
I'm most convicted on averaging in cryptocurrencies, which I've been buying. I've also been averaging in these growth tech stocks, the ARK type names. I've got a big basket of stuff to reduce risk in some of this because it's very risky to buy markets that are down, but they're down 75, 80, 85%. And, technology is not going away. The exponential age doesn't go away because prices have gone to the bottom of the logarithmic channel. So, these are 2 to 3 standard deviations oversold. They look very attractive to me, but you need to have a long-term framework And you need to be able to understand that you may still be wrong by 20, 30%. Who knows? And that not to be an issue because the upside is 10 times that. That's how I think about this. In terms of the trade I like the most here and now that is lower volatility, lower risk is the dollar, bonds. So whether it's TLT or whether it's, whatever flavor of bonds you like.
While Bitcoin and other top cryptocurrencies continue to fail to break out, all eyes of analysts are on the latest U.S. inflation numbers to be released on Wednesday, July 13. Last week, Bitcoin had surged above $22,000, but failed to continue the momentum. At the time of writing, Bitcoin was again just above the $20,000 level. The release of consumer price inflation, CPI, in the U.S. for June 2022 is expected to be released tomorrow. The numbers may indicate whether the hawkish stance adopted by the U.S. Federal Reserve has succeeded or not in slowing the pace of inflation. Experts say that the U.S. CPI data on July 13th could be the next trendsetter for crypto markets. Regardless of the current market situation, we strongly believe here at Savvy Finance that the crypto market, especially Bitcoin, will surge again. It's just a matter of time. Thanks for watching. Stay savvy.